Welcome to the Dealmakers Podcast, where I talk about different strategies on how you can build wealth by investing in real estate. This is for real estate agents, real estate investors, and today I want to talk about being an investor and using real estate as a tool to help you build wealth and how you can retire. I want to talk about multifamily properties. I want to talk about cash flowing assets. I want to talk about how you can build a portfolio and then retire. Today we're going to talk about cash flow, how it works, multifamily properties, how to scale with multifamily faster than single family properties, how many properties that you really need to retire. We're going to talk about some creative financing. We're going to talk about some common mistakes that you need to avoid when you are an investor, and we're going to talk about how real estate can create a passive monthly income. So without any further ado, let's jump in. But smart investors, we build assets that eventually produce enough income and produce enough passive income so we can then retire, and that's where real estate comes in at. Real estate have created more millionaires and more long-term retirement vehicles than almost any other investment out there. So there's a lot of different investments you can have, but real estate is the number one for building long-term retirement income. Now, why real estate is so powerful when it comes to your retirement. Let's talk about this. So you can purchase a property and then put a tenant in that property, and that produces passive income. We call it cash flow. So income minus the expenses gives you cash flow. That cash flow is passive income directly into your pocket every single month. This is great because it's different than earned income. Earned income, we have to get up, go out, work a job. Even some businesses. I know people who start a business and they think they are producing cash flow, but that business can really become just another job. What I love about real estate can produce cash flow and give you earned income. Another huge benefit with real estate is appreciation. Real estate typically appreciates about 4% every year. I know people who purchased properties for $15,000 back in the 60s and the 70s, and now it's worth $300,000. Why? Every year it have appreciated. Here's what I love about multifamily properties. You can force the appreciation because income is directly attached to the value. With multifamily, income is directly attached to the value. So the higher the income, the higher the value. So let's talk about appreciation. You can purchase a property that have issues. You can then rehab it and force the appreciation, force the value to go up. Here's another huge benefit and what can help you retire with owning real estate. You can purchase a piece of property with OPM, other people's money. You can use financing, creative financing, purchase a property with little, no money down, right? OPM, other people's money. And then you can put a tenant in that property. Every month, the tenant pays you rent. You take that rent, pay off the mortgage, and the difference is what we call that cash flow. But the tenant is paying down the mortgage for you. Love this. Multifamily properties, 2 units, 5 units, 20 units. Those 5 units in that 5-unit apartment complex, you have 5 tenants that's paying the mortgage for you, that's paying down the mortgage. I talked about this, but this is another huge point. Leverage, financing, OPM, other people's money. You can go out and get financing. Over and above financing, you can have a lot of different strategies you can use to leverage the property so it's less money out of your pocket. Here's another huge benefit to using real estate as a tool for your retirement is a hedge against inflation. This is huge. I know a lot of people say, hey, Luther, right now gas prices are high, clothes are high, utilities are high, things are going up. Okay, the great thing about real estate, and I always teach, every single year you should increase the rent. Real estate is a great hedge against inflation. But here's the big picture, and here's what I want you to take home today. You can purchase property, have cash flow, use OPM, other people's money, use creative financing to get into the property. The tenant pays you rent, which indeed is paying down your mortgage. Now you are increasing cash flow, increasing your equity in the property, increasing the property is appreciating every year, which is helping fund your retirement. This is huge. Next, let's talk about some differences between single-family homes and multifamily homes. So, first of all, single-family homes, 1 unit. From 2, 3, and 4 units, the bank, the financial institution, when you're looking at getting a mortgage, 2, 3, and 4 units are looked at the exact same. Officially, multifamily is 5 units and above. I like to teach from 5 units to 59 units, or from 2 units to 59 units. That's our sweet spot. So what's the beautiful thing about purchasing multiple properties? I always say the more units you can purchase, the better. If you can purchase 2 units, that's better than 1. If you can purchase 4 units, that's better than 2. If you can purchase 20 units, that's better than 10. Why? Several reasons. Let's talk about some. Number 1, multiple streams of income. Multifamily properties give you multiple streams of income. Single-family properties give you 1 income stream. Here's a huge risk. It's called vacancy. Vacancy loss is huge. If you own a single-family home, that one home becomes vacant. You have 100% vacancy in that single-family home. If you have a quadruplex, you have 4 units and 1 unit is vacant. 25% of the property is vacant rather than 100% of the property is vacant. So with multifamily properties, duplex, quadruplex, 5 units, 20 units, the more units, the less risk when it comes to vacancy. The more units, the more income streams. You want multiple streams of income. You want to retire. You want to use real estate as a tool to help you retire. Multiple streams of income. This is huge. Also, multifamily is easier to scale. You can achieve your financial goals a lot quicker with multifamily than single family. So you're able to scale your business a lot quicker. There's also advantages in your financing with multifamily that you will not have with single family, okay? But here's what's huge about single family versus multifamily. Let's say you need 10 units to retire. One property, 1 10 unit can allow you to retire. Single family, you would have to go to 10 closings, purchase 10 houses, have 10 single family homes to achieve the same goal. Where with multifamily, if the goal is to have 10 units, you can purchase 1 property and now you are done. Okay? Multifamily will accelerate your retirement a lot faster than single family. One of the things that I always teach and I want you to make sure that you understand this, is how much income do I actually need? In my upcoming masterclass, one of the first things that we're going to talk about is how much income do you really need to retire? How much income do you need to really achieve your goals? I want financial independence. I want to be debt free. I want to retire early. I want to retire, period. Okay? How much income do you really need? So let's look at this. The first thing we have to do is we have to look at how much income do we really need to retire. Let's look at an example. Let's say that I'm saying I need $8,000 a month to retire. Okay? I need $8,000 a month of passive income to retire. Let's say that I am looking at multifamily properties. Let's say each unit is producing on average $500 worth of monthly cash flow. That means I need approximately 16 units that's producing $500 worth of cash flow, which will give me $8,000 a month. So I can purchase 2 8-unit apartment complexes. I can purchase 1 16-unit apartment complex. But 16 units, that's what I need for $8,000 per month. Now, if we look at single family, I would have to close 16 different single family houses. But I could, in multifamily, I can have 1 multifamily property. Or I could have 2 multifamily properties. 1 8-unit and then another 8 unit. Here's what I'm trying to teach you here. Retirement really becomes nothing but a math problem. How much cash flow do I have coming in per unit? How much cash flow do I have coming in from this apartment complex? Then I just have to figure out, all right, I have this much coming in per unit. I have this much coming in from this apartment complex. How much money do I really need to retire? How much money do I need to become financially independent? How much money do I need every month to become debt free? It's really nothing but what? It's just a math problem. And then going out, locating, analyzing, and purchasing the right properties. That's why I have put together my master class. At the master class, we're going to talk about, first of all, your goals. Do you want to be financially independent, debt-free? What is your goals? The next thing we're going to talk about at that masterclass, we are going to talk about how do you analyze the deal, because analyzing properties is very important. Join me for my upcoming masterclass. You can register at masterclass.lutherragsdale.com. Okay? All right, next. Major key, and I've talked about this before, creative financing. Financing is a major key to you having success when purchasing real estate. You have to understand the financial part. Now, can you pay cash? Absolutely. But I know investors who have cash, but they don't pay cash for the property. They finance the property. We talked about this earlier. Leverage, OPM, other people's money. Let's talk about some financing strategies. Okay? You have conventional loans. Conventional loans, a very powerful tool to help you purchase properties. What is conventional loan? You walk into the bank, you qualify, you get a loan. We also have debt coverage ratio loans. This is very important. What is a debt coverage ratio loan? Basically, with multifamily property, the bank or the lending institution says, show me the numbers. Let's make sure there is enough rent coming in to cover the debt, to cover the mortgage. Okay? The bank says, we're not going to worry about you, the investor. This is very powerful. Major difference between single family and multifamily. The financial institution says, we're not worried about your income. We want to look at the debt coverage ratio. Is the multifamily property generating enough income to cover the mortgage? Seller financing, another very powerful tool that we use in multifamily properties. Basically, the seller holds the financing. Rather than going to a bank, you can have seller financing. This is very popular when the seller have the property paid off cash. There's a lot of sellers out there who the property's paid off and they will hold the financing so you don't have to go to the bank. The seller holds the financing. You can negotiate the terms, negotiate the interest rate, negotiate everything. Okay? Next, assumable loans. You have qualifying and non-qualifying assumable loans. What is a assumable loan? The seller have a loan on the property that's assumable. You, the buyer, can say, hey, I want to assume the loan. You take your name off, I will put my name on. Now, there's a couple of different types of assumable loans. We have qualifying assumable loans. We also have non-qualifying assumable loans. What does that mean? Qualifying, I'm going to qualify. I'm going to look at my credit, look at my income, look at me. I'm going to qualify when I assume the loan. One that I like even better than that is non-qualifying loan. It has nothing to do with me. I do not have to qualify for the financing. Listen, investors, you can really scale and buy a lot of units and buy a lot of properties when you understand creative financing, when you understand different ways to finance a multifamily property. Next, let's talk about some of the biggest mistakes that investors make. This is huge. Okay, so let's talk about some mistakes, just some mistakes that a lot of investors make when trying to purchase property. Number one, buying just a flat out bad deal. There is bad deals out there and you have to understand how to acquire and find good deals. Now, I love to purchase properties with people that have a situation such as foreclosure, estate sales. I love this. I love to purchase properties that have poor property management. There's properties out there, great location, great opportunity, but the people either can't manage it or they get tired of managing it. Okay, I can then purchase the property. But a mistake that a lot of investors make, they purchase bad deals. If a property is having management issues, but there's also a lot of major rehab, I stay away from major rehab. That can be a bad deal. Major mistake that some investors make is purchasing bad deals. Here's another major mistake: poor analysis. Investors don't understand how to run the numbers. That's why you want to be at my upcoming masterclass. We go over the numbers. This is how the numbers work. You have to understand how to analyze real estate. Income minus expenses equal NOI. NOI minus debt service equal cash flow. You have to understand cap rate. I could go on, but you have to understand how to analyze properties. Okay? Next major mistake that investors make is location. Location will make you or break you. You can find a property that have great numbers, but it can be in a bad location, so vacancy can be high. I have seen investors purchase a property and the biggest problem was it was in a bad location. Okay? So do not make that mistake of purchasing a property with a bad location. Last but not least, a major mistake that a lot of investors make, not understanding the cash flow. Cash flow is king. And look, numbers don't lie. You want to purchase properties with cash flow. Okay, remember this. One mistake, one bad deal can affect your retirement goals. One bad deal can affect your financial goals. So, please remember this. You will make a mistake, or you can get education, and that education can eliminate mistakes. Or you can go out there and you can make mistakes in the general market, but either way, it's going to cost you, right? Now, next, which is huge, okay? Why agents have a huge advantage over non-agents. Now, let me be very clear. Can you invest in real estate without a real estate license? The answer is 100% absolutely yes. You can purchase real estate without having a real estate license. But I want to teach you some benefits to having a real estate license. I am a licensed real estate broker. Here's some benefits. Number one, having real estate license allows me access to more deals. It allows me access to deals that other people don't have access to. I love having my real estate license. Next, by having my license, I train agents and I teach real estate agents how to locate and analyze properties. Because as a real estate agent, once you understand and once you master how to locate and analyze properties, you can then find a lot of different properties. The majority of the properties that you find, you're not going to be able to put together a deal for yourself, so you can list it, number one. Number two, you can put together a partnership. So when I am finding properties for myself, I always try to buy it for myself. That's number one. Number two, if I cannot buy it for myself, I try to put together a partnership. If I cannot put together a partnership, so be it. I list it on my local MLS so I can earn a commission. Now, one of the keys is income, whether you're talking about retiring, financial independent, becoming debt-free. Income is very important. And with your real estate license, you can earn a commission every time that you purchase a property for yourself, or if you help a client, you can also earn a commission. I obtained my license in the beginning strictly to earn a commission every time I close a deal on a property that I purchased for myself. I have real estate agents in my firm who strictly have license not to become the traditional real estate agent, but that agent have their license so when they purchase a property for themselves, they can earn a commission. So as a real estate agent, you can build a portfolio a lot quicker because you can earn a commission even on the properties that you purchase for yourself. And that commission is 100% negotiable. No, it's not 3%, 4%, 6%, 10%. It's negotiable. Whatever the buyer and the seller agrees to, that can be your commission. If you find a property that's off market and is not with another real estate company, you can earn 100% of the commission. Join me for my upcoming masterclass. You can register and find out more information by going to masterclass.lutherragsdale.com. That's masterclass.lutherragsdale.com. Okay? Now, with all of that being said, what have we learned today? Cash flow is king. Real estate is one of the most powerful tools to help you become financially independent, to help you become debt free, to help you retire. Even if you are older and you're running out of time and you have not saved up for your retirement, real estate can help you achieve your goal quicker than any other vehicle that I know out there. Okay? Join me for my upcoming masterclass. Register, find out more information at masterclass.lutherragsdale.com. I look forward to seeing you there soon. Thank you, and may God bless you.